Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in the last video we talked about dividends, we talked about rental income, we talked about how many companies have paid me in the month of March. I've shared with you guys the plan moving forward, how much I'm expecting and so on. In this video we're going to talk about the portfolio. We're going to talk about number one, how I got to this £100,000. Number two, we're going to talk about all the buys and sells. Then we will look at each individual stock and see what I'm going to do with it moving forward. And then we are going to talk about the ISA account, because remember, the ISA account is actually due next week. I think next Friday, I think, is the last day. And then basically we'll get £20,000 allowance. And exactly what am I going to do? Am I going to contribute to this account? Am I going to move on to another account and leave this one alone? I'm going to tell you all that information, inshallah, in this video. If you like this type of content, you like the the transparency and what we're trying to do here, please like the video. That's the minimum you can do. Of course, unsubscribe to the channel. If you can do those two things, at least that would be absolutely wonderful. Because like I've always said to you guys, it takes a lot of time and effort to put these things together. And as well as, of course, if you can join us in the Patreon account, where you get access to all of these things, as well as the Discord, where a lot of brothers are sharing, basically the good buys and sells they're making regularly, and you get access to all of these things, inshallah. So it will cost you about 15 pence per day, which is not a lot. Now let's talk about the portfolio. Let's talk about what we're doing moving forward. Now before we do that, I just want to talk about generally the market, okay? And then I'll talk about a couple of other things, and then we move on to basically the buys and sells. As you can see here, this is the fear and greed index. This kind of gives us an idea of where the sentiment is right now in terms of investment, especially investing in the stock market. And right now we are here 71. So that means it's actually we are in the greed side. We used to be in extreme greed, and we've now moved on to about 71, which is basically still a greed. Now what that means to me is that there's a lot of investors out there that genuinely are investing in the stock market, thinking the stock market will never come back down again. We're not going to see a correction. That's what it is. If we see another 5% down, basically downwards, then potentially we might end up to neutral. People thinking, okay, this is not what we expected. And then it starts 10%. People start fearing them, taking their money out, worrying about what might happen. And then we get to extreme fear. By then we will be selling everything. And that's exactly what happened in 2022. 2021, everybody was buying everything, including crypto and so on. Every stock went to the moon, whether it was an IPO or not. Everything went to at least 20, 30, 40%, 50. It was just going up every single week. 2022, oil companies or energy companies were doing well because the oil prices went up. Everything else was just went down, especially with the technology companies, especially those companies that had a very high multiples. They couldn't guarantee they're going to make that money, and investors start taking their money. There was a lot of retail investors and so on. And then we ended up with extreme greed to the point where the markets were going down 4%, 5% every single. I think we were down 18% by the end of 2022. 2023 was different. So last November, since the end of 2023, basically everything went up, especially with the AI and everything else that's happening. Since then, we've been going up. And if you look at the S&P 500, a year to date is about 27%. If you look at the last 6 months, okay, past 6 months, since the beginning of October, we went down quite a bit. Okay, from there, we're up now 27%. Since basically October, the lows of October, for I think 27th of October up until now, okay, around here, everything was on sale. From there onwards, we've been going up. So 27%, 28% almost. Now, are we going to continue going up? Are we going to continue basically, things are going to come down? As always, if you look at the last 5 years, okay, apart from COVID, you see a little bit of corrections here and there, okay? You see downward of about 5%, 6%. It depends on where we are. So from here to, for example, the bottom there, it's about 19%, and that was 2022. We've seen those things, okay? We've seen this before. Again, from that top to the bottom there, it's about 16%. Okay, so these things do easily happen, and hopefully for long-term investors, that is a great opportunity to buy high quality businesses that and hopefully will do well in the long run. in 10 years from now on, some of these companies will not actually worry about this. So if I give you an example of these companies, just to Home Depot, for example, and you look at the last 5 years, okay, it's up 89%. It has seen some corrections, okay, from, when the stock market went down, it went down 37% February 2020. Since then, from that bottom to right now where it is 152%. So on that day, if you purchased, I don't know, £10,000 worth of that stock, right now you would be up 152%. So in the long run, this is why the stock market does well, because if you hold on to companies, but you might be selling that day because you're worried about, you might have sold it here when it actually went down, or here, or here, or there. So from here, if imagine you bought it there and then you sold it there, you would have lost about 17%. But if you hold on that day and you bought it, if you bought more, okay, let me hold that, okay, that will be 38% up from that bottom. So this is why it's really important to change your mentality when it comes to buying stocks, and you cannot just rely on 1 month or 2 months, whatever. You have to wait it for quite some time, and that's what I'm trying to do with this portfolio. I'm trying to hold on to some of these companies for a very long time, inshallah. And some of these companies have had them for a long time. Companies like Broadcom, for example, companies like Merck, for example, this stock here has been sitting here since I don't know how long. Okay, about 3-4 years now, and I'm up 182% right now. So what I'm going to do now is I'm going to show you all the buys and sells for the month of March, and then we will look at the overall portfolio. And as you can see, you can pause the video. For March, we've actually purchased all of these stocks, all of these companies. Okay, how many shares I bought, how much I spent on each, the yield at that point, basically excluding the 15% that I need to pay. Now, again, not every single stock. So remember, this is UK based. So I didn't have to pay that dividend. I don't have to pay that 15% dividend, as well as AstraZeneca. So and also RB as well. So the rest of them I need to pay that 15%. The rest, apart from these three, and this is how much dividend they're paying me right now per share. And if you times that how many shares I bought, this gives us the total income. And for this month, if that added about £77 in total income, inshallah, moving forward, which means if these companies increase their dividend every single year moving forward, that will automatically increase. That means my yield on cost will be way higher than my current yield of the portfolio, and I've invested over £4,500. Now, some of that money came from because I trimmed or I've sold 3 shares of ASML. The reason I sold that is not because I hate the stock or whatever, but I needed to take some profit off the table because the stock has gone up quite a bit, and I will show you in a second. So I decided to sell 3 shares of this company and then use that money to buy more of these companies. So I bought 5 shares, okay, of this company with a lot of the money that came from here. So, which I think genuinely is good company. It's still it's not fairly valued. It is almost expensive right now, and I'm going to leave it alone, and I'll talk about it in a second. I added £2,340. Now, my ISA account, I'm going to talk about that in a second, but that I think it was the last bit I could add, so I've added everything I could. That gave me over £4,500 in basically purchases of this month, and including the sales that I've made here. So what am I going to do moving forward? So these are the companies that I bought, and I'm going to continue buying them, inshallah, as long as they are undervalued and so on. I'm going to update my watch list, and I'll share that with you guys in the next few weeks, inshallah. And my watch list is very important to me because I don't like buying companies just for the sake of them, for the sake of buying stocks, because right now things are becoming really expensive. Some of these companies have now gone up quite a bit. So I will be very careful adding to some of these companies moving forward. And now I'm going to look at the portfolio and show you exactly what is going on here. Now, if we just look at the overall, as you can see right now, basically we are £102,000. Now, how did we get to this? So let me tell you the bit of a story, because I know a lot of you are quite new to the channel. In May of 2020 is when I started this portfolio here. Before then, I used to have a Hargreaves and Lansdown account. I closed it down. I moved the money over here. Okay, since then, so May of 2020 is when I started. Since then, I've maxed my ISA account every single year, including this year, and I'm going to show you that in a second. And there you have it. So I have now actually added that £20,000 I needed to, so 100% utilization, and I've got about over £500, over £550 to invest in the basically next couple of days. But I've maxed my ISA account, and I'm going to tell you exactly what I'm going to do moving forward. Okay, towards the end of the video, I'll tell you exactly what is happening to this account, because I've got a bit of news to share with you guys. Now let's have a look at the individual stocks. So air product and chemicals, I still feel like this company is undervalued, so I'm going to continue buying it. I'm going to share with you guys a bit more information when I do, inshallah. ASML, too expensive right now. AstraZeneca, I'm still buying. I really like the company. Automatic data processing, I think it's still fairly valued. I would like to buy more of this company, maybe one more share of this company next week or so. Let's see what happens from there onwards. In terms of Broadcom, I think it's overvalued right now. I'm not touching it. Cummins, again, another overvalued company. Can you imagine? This company was undervalued not long ago. Right now, I'm up to 38%, or 1,100 pounds, which is absolutely crazy. Exxon was just a new addition to the portfolio, 14% up since then. I'm going to continue buying this. I think it's still undervalued, but I don't want to add to it. Maybe if it comes down another 4 or 5%, I'll probably buy more of. Hershey, similar sort of a situation, but I just need to buy maybe 3 more shares, and then I'll leave it alone. Home Depot, very expensive, leaving it alone. Intuit is another really great company, and I wish I bought more of this, but is now about almost 17%. I'm going to leave it alone. Very overvalued right now. Now this ETF, I'm not sure why I have not bought more of, because a lot of the companies that I was buying were undervalued, so I should have bought more of this company and this ETF. I really like the ETF. It's about 9% since then, so I might start basically in the next few months. Actually, any dividends that I receive, actually just put it here. I'll let you know, inshallah, what I decide to do with that. But I'm not selling it. I'm definitely should be buying, basically. That's what I'm trying to say. J&J, love the company. If you watched the last video, you will know exactly what I think of this company. £160 up right now. Basically, Lindsay is another company that I really like. I wish I bought more of. It's still fairly valued, so I might buy more. Mastercard is actually fairly valued still, and I think is one of the great businesses out there. I'll probably buy more if I could, inshallah. Medtronic is still undervalued, 3% actually down right now. Remember, at one point it was about 7-8%, has come back down up again, which is quite nice to see. Merck, I'm not touching this company. It seems very overvalued at the moment, but they have a lot of good news recently, and it's gone up about £1,200 right now, or 82%. Haven't had in the portfolio for quite some time. MSCI, so this is a new stock, so I'm going to leave it alone for a bit. If the market sees correction, is one of the definitely my targets will be to get at least another 5 shares of this company. Procter & Gamble, I'm not touching it, just leaving it alone. It seems very overvalued. Public storage, I think I've done enough now. I don't think I'm going to add to it in the next few months. If we see a massive correction and it goes down again another 9-10%, I will add more. But right now, as you can see, it's going to that about 6% of my overall portfolio, which then means I might have to trim it, but I'm going to leave it alone for now. Qualcomm, look at this company, over 5% of my portfolio right now, which is absolutely crazy. Overvalued, I'm not touching it. RB is down a lot, so I will be buying more. If I need to buy at least another 20 shares of this company to go to up to at least 100 shares. Rio Tinto seems undervalued as well. I will be buying more of this company. So now 60 shares, so I need to, these two I want to get to at least 100 shares and leave them alone. I really like these two UK based companies. This one is going through a bit of a transition, so I like that. The fact it gives me an opportunity to buy more of. And then we got S&P Global, which is, according to Morningstar, I think is fairly valued, but I think is overvalued in my opinion. I'm going to leave it 17% up. Union Pacific is exactly the same situation, very overvalued right now, up 22%, leaving it alone. UPS, definitely would like to buy more of this company in the next few months. Inshallah, still undervalued, great company. I think it's in the long run it will bounce back. I'm not worried about the business and side of things. And then finally, Visa seems fairly valued. Just similar situation with MasterCard. I think they're both fairly valued at the moment, but I'm not going to buy more of, because I'm up almost to 30%. That's over £1,000. I'm going to leave it alone. Just basically look for opportunities other places. because buying more of these type of companies that I'm up a lot, basically that means I'm basically averaging it up, which is not good idea, especially when the market is so expensive right now. So I'm going to leave it alone for a bit. And as you can see, this is the breakdown of all the stocks, so you can pause the video. Okay, as always, I think I'm definitely going to share the link with you guys. The link is available as public, so I'll share that with you guys anyway. And finally, the things that are one of the things I've talked about for quite some time was what I'm going to do with this ISA account once it gets at least to 100,000. I've always said to you, once it gets to 100,000, I'm going to leave it alone, because remember, I'm actually protected up to £85,000. Now that's basically gone up about 15%, 15,000 pounds more than that. So what am I going to do moving forward? Now, the government, I don't know if you've noticed recently, but the UK government have announced now that you can actually split your ISA. Okay, meaning you can actually have two ISA accounts. So can you split your ISA allowance between different providers? So I now have the opportunity for the first time in 2024, they will give us allowance of £20,000, and as long as we make sure we don't go above that, okay, you can have two different providers, 10,000 each, as long as you make sure you're within that £20,000, which is absolutely huge, because that is a game changer for me. Because initially what I wanted to do was completely leave this account alone and then just use my Interactive Brokers account or any other. By the way, I'm looking for a new brokers, so if you are if you're using any other brokerage out there that's not this one here, please let me know. But I'm actually going to use my Interactive Brokers account, which I really like, and I will talk about that more later on, because in terms of research and so on, I can do everything within that platform rather than just going into different websites and so on. It basically even has a section for things like Morningstar valuations and all of that stuff. So I might start using that one. So one of the things I'm going to do moving forward is to leave this account alone. And of course, I will basically have the ISA allowance available here and the other one, and between the two I'm going to contribute. I'm not going to contribute much to this account. Majority of the money will go to the other account, but if I ever need to, I will do it. Okay, if I ever need to, I will do it. If I see an opportunity, for example, and this one goes down quite a bit, rather than adding to the other account, I might just buy it here just to keep in one place. But I will let you know in the long run exactly what I'm gonna do, inshallah. I will do a couple of videos coming up, inshallah. So yeah, that's the plan, inshallah. Maybe split the £20,000 into two, or I don't know, maybe 75% and whatever, 25% and so on. But I definitely want to reinvest all the dividends that I receive within this account will be reinvested within here, and then potentially buy new stocks, new companies in the other one. Now, because the markets are very overvalued at the moment, I'm only going to buy companies that I feel like are really undervalued at the moment. So that's the plan moving forward. Final thing I want to talk about is I will not be buying as much stocks as I have done in the last few months, because I was trying to max my ISA account and have now achieved that. So what I'm going to do is I always start slow at the beginning of the year. So from April onwards until July time, I just buy about £1,000 worth of stocks here and there, and then towards the end of the year I buy more. And the reason I want to do that is because I do have a couple of other projects I'm working on, so I want to make sure that inshallah I don't run out of money and stuff. But I still will contribute to at least £1,000 every single month here and there, and I'm going to leave this account for a bit. So for maybe the next 3 to 4 months, I don't think I will be adding any new money to this account. And then any dividends will be reinvested. Any sales I make, I will buy within this account, and I will leave it alone. So just reinvesting, selling if I need to, and so on, reinvesting within here. But of course, now alhamdulillah, the fact that I can have some of my ISA account here, which is absolutely perfect. So I'll continue to do that, inshallah. Anyway, this video is getting longer than I wanted it to be, but I hope you appreciate the transparency and everything I'm doing here. Like I've always said to you, any buys, any sells every single month, I will share that with you guys. Any dividends, watch the last video. If you have any questions of how we got to this stage, let me know, inshallah. Like I've always said to you guys, this money comes from my salary. I save enough every single month to reinvest in this portfolio, And of course, my goal is inshallah to live off in these, these portfolios and rental incomes inshallah in the long run. And while I'm still young, I'm going to continue buying these companies, buying properties as much as I can, and inshallah we'll continue to doing this. Anyway, I'm going to stop here. Have a wonderful day, and thank you for all your support. Join us in the Patreon account if you can. Assalamu Alaikum.